Welcome to our Crypto News in 10, a daily podcast bringing you the latest news about crypto in under 10 minutes. Here's what's shaping crypto on Tuesday, January 13th, 2026. Washington is lining up a long-awaited market structure markup for digital assets. One of crypto's biggest custodians is heading to the public markets. Bakkt is making a bold bet on programmable payments with a stablecoin infrastructure deal. A major bank says this will be Ethereum's year. And Florida's legislature opens with a proposal to hold Bitcoin on the state's own balance sheet. Prices are steady to slightly firmer, with Bitcoin near 92,000 and Ether in the low 3,000s. Let's get into it. First up, policy momentum. The U.S. Senate Banking Committee has officially scheduled a markup on comprehensive digital asset market structure legislation for Thursday, January 15th. Chair Tim Scott says the goal is clear rules that keep innovation in the U.S., protect retail investors, and strengthen national security. This path included multiple discussion drafts last year and a request for information. Today's draft, framed as providing market clarity, is helping lift sentiment, with Bitcoin hovering around 92,000 this morning. Whether you're a builder or an allocator, a committee markup is the first real test of where compromises land: custody, exchange registration, and who oversees spot markets. We'll watch for amendments and any signals on stablecoin coordination with the already enacted Genius Act. Next, BitGo is going public. Reuters reports the Palo Alto-based custodian aims to raise about $201 million at a valuation up to $1.96 billion, listing on the New York Stock Exchange under the ticker BTGO. Goldman Sachs and Citigroup are the lead underwriters. BitGo's pitch is simple. Safekeeping is the linchpin of institutional crypto for exchange-traded funds, banks, and corporates. And with Basel disclosure rules now active and U.S. market structure moving, demand for regulated custody should be durable. If this books well, it's a barometer for primary market risk appetite in crypto-adjacent equities early in 2026. Third, Bakkt is going all in on programmable money. The company agreed to acquire Distributed Technologies Research, DTR, in an all-stock deal that, based on today's share count, would issue roughly 9.13 million Class A shares, about 31.5% of Bakkt's share count, to DTR holders. Intercontinental Exchange, which owns about 31% of Bakkt, has agreed to vote in favor. The strategy: bring stablecoin settlement rails in-house to speed up merchant and bank integrations, reduce third-party dependence, and lay the groundwork for neobanking partnerships. Bakkt also says it will change its corporate name to Bakkt Incorporated on January 22nd. Watch this as a test case for US-regulated, enterprise-grade stablecoin payments in 2026, exactly the kind of plumbing that could translate policy clarity into real-world adoption. Before we continue, here's a message from our sponsors.
Need elite developers fast? Elite Coders connects you with rigorously vetted senior engineers in 24 to 48 hours. Staff augmentation, dedicated teams, or full project delivery. We've got you covered. Visit elitecoders.co to get started today.
All right, let's get back to it. Next, a big bank just planted a flag for Ethereum. Standard Chartered's digital assets team says 2026 will be the year of Ethereum, even as it trims some near-term price targets. The call leans on structural advantages: Ethereum's outsized role in stablecoins, real-world asset tokenization, and decentralized finance, plus ongoing throughput improvements and relatively more supportive flows versus Bitcoin. The bank now sees Ether ending 2026 around $7,500, with a longer-dated path to $30,000 by 2029 and $40,000 by 2030. It also expects the ETH to BTC ratio to drift back toward the 2021 highs, around 0.08. For allocators, the thesis is rotation. If market structure rules unlock compliant staking, tokenized assets, and payments at scale, ETH could outperform, even in a range-bound tape. And fifth, state-level treasury experimentation is back. Florida lawmakers filed Senate Bill 138 to create a Florida Strategic Cryptocurrency Reserve, and the state's 2026 session opens today. The design is notable. It walls off the crypto holdings in a standalone reserve with its own custody standards, reporting, and advisory committee, avoiding direct exposure across pensions or other funds. The purchase authority is limited to assets with a $500 billion average market cap over the past 24 months, which at this point effectively means Bitcoin, Regardless of where you stand, a state-managed Bitcoin reserve would mark a new phase of public sector participation, moving from resolutions and pilots toward formal balance sheet policy. Quick recap. In DC, the Senate Banking Committee's Thursday markup could define the guardrails for exchanges, custody, and market oversight. Keep an eye on amendments. BitGo is testing the IPO window with a near $2 billion target. Bakkt is knitting together stablecoin payments by buying DTR and rebranding next week. Standard Chartered says 2026 belongs to Ethereum with the fundamentals to back it up. And Florida opens its session with a proposal to put Bitcoin directly on the state's books. We'll be watching all of it. Same time tomorrow. Thanks for listening and see you tomorrow.